Simultaneously, I'd welcome in Ramesh Damani, member of the Bombay Stock Exchange. Mr. Damani, good to have your time here on NDTV. I know you've been very busy this afternoon, and I've been listening to your comments on rival networks closely, so let's get straight to it. Are we set for a leg of gains for the market post this budget, or are the global clouds just, too large?
Manvi, I think the latter, the global clouds are too large, but let's not detract from Mr. Jaitley's hour out here. I think he delivered a good budget. As they said, no evil was done, and the market rallied because there were apprehensions that it would be a Robin Hood budget, it would soak Peter to pay Paul. Nothing of that sort transpired. Very clearly, very distinguished, laid down the 10 points that the government was focusing on, fiscal deficit under control. So I think so far so good. I think from Monday, Dalal Street will again start focusing on Wall Street and what happens in the White House. And I think that is going to make for a very interesting year. But tonight we're happy. I think the market dodged a bullet. And I think Dalal Street has what we call a relief rally in the making.
Okay, I'm just wondering, how much steam the relief rally could have. It was so interesting to watch. As soon as the speech ended, that relief was visible in the spike that you saw in the Sensex and the Nifty chart. But that aside, just break down the components of relief. Long-term capital gains, sure, that's a relief. No changes in service tax rates, that's a relief. But I'd love to hear from you how you'd prioritize the relief points.
I think the market is, of course, very narrowly focused on its motives, and I think the fact that no long-term capital gains came was a huge relief to the market, though I had a minority view saying that even a modest amount of long-term capital gains would be okay. The market could handle it, but we got nothing of that sort, so that was very good. Service tax would expect to go up, didn't go up. Corporate tax rate was supposed to come down for the listed entities. It didn't come down, but the market, didn't really care. The fiscal deficit number came in as per our expectation between 3 and 3.3. The thing that I was enthused about the market, Manvi, was the disinvestment policy as spelled out in the budget and as promulgated on the sidelines of the budget notes by the disinvestment secretary. Let me take you through 2 or 3 major points. The first, they're going to deepen and widen the PSU base. So a lot of PSUs that are not listed now will be listed in a time-bound manner, which is great. As Peter Lynch once famously said, that when the Queen sells the silver, you want to be buyers of it. So that will create a lot of value-seeking opportunities for sharp investors. PSUs have made a lot of money for people, and hopefully this will continue with this set of disinvestment. Secondly, they talked about strategic disinvestments, especially off the budget, off camera. The disinvestment secretary has been saying that they are going to do for strategic sales. That is very good news. Thirdly, they're going to take the PSU monoliths and probably split them into 2 companies, a refining company, a marketing company, and probably sell off the marketing companies. That would unlock a lot of value for the PSU sector. So I think those were some of the highlights. There are lots of other issues, and we'll have to go through the fine print, detail after detail. But it seems to me that the market was very happy with the performance delivered by Mr. Jaitley today.
Indeed. Correct me if I've got it wrong, but you have exposure to the oil companies, and, what would your advice be to those who are saying, okay, what does this offer? This whole idea of, consolidation, merger, restructuring of the oil companies, and then, a market, a sell-off. I mean, how would you approach this space now from a market perspective? What advice would you give?
Manvi, unfortunately, due to SEBI regulations, I cannot recommend particular stocks. But generally, in my experience, that when the government undertakes that kind of exercise to restructure, or any corporate takes this kind of advice, it is to unlock value, it is to realize their full value. So I think the government has given us such a time-focused deadline in which they're going to do this, in which they're going to meet the disinvestment target. I would pay heed. I think typically those are done to enhance value, so you can party along with them. And the government has already mandated that these companies, which are now in the flush of their profit season because of oil deregulation, because of price flexibility, are bound to pay 30% dividend and declare bonuses. So while the bonuses have been declared, the dividends come every year. So they are, I would assume, in a sweet spot. And not only the OMC, entire basket, entire gamut of PSU stocks could be looked at in the same light. The government has already commented favorably on BEML, NMDC as other candidates in line for disinvestment. So I think this will be a theme that will resonate through the markets. And if the government needs money, I mean, Manvi, the government needs money. Yeah. They thought demonetization would give them a bonus of 2 lakh crores or 3 lakh crores. That didn't happen. So the government can use disinvestment money then to push out infrastructure, nutrition, health. So that is a great way. That is the way the market has been saying for the last decade and a half, by which the government could raise resources. I think finally we are finding a government with the political courage to bite this bullet and say that the non-necessary PSUs, we will disinvest, we will make some money, and that we will plow the money back, the taxpayer money that has built the PSU, back to the taxpayers. So I think it's a great win-all situation for everyone.
So we've touched upon two broad topics. One is the sigh of relief by the markets and why. One is the divestment story, and many thanks for your insights. Is there anything that we haven't covered which you think is an opportunity from an equity perspective post this budget?
I think, the two other opportunities that, I will tell my clients to focus on is, of course, the move from, cash to a cashless society. Anytime such a major move is undertaken by such a major economy, it will create lots of opportunities by people who can do biometric reading, people who maintain databases, people who do algorithms for that. So I would tend to look at those kind of companies that are in the process of helping the governments and the economy's transition from cash to cashless. The other one, that theme that worries me constantly, and the FM alluded to briefly, the importance of cybersecurity. I think that is, a global threat, and almost any country with a PC, there are only 6 nuclear powers that can threaten us nuclearly in a nuclear manner. But cybersecurity can be done by almost any country to any other country, because almost everyone has a PC and an internet connection. So it's something that investors should pay attention to, because the damage from cybersecurity leak in terms of ransomware, phishing, virus attack can be very serious and catastrophic for a business. So I think companies that help solve that problem are some of the values that you want to look at in the year ahead.
Ramesh Damani, many thanks for your time and insights. And I know it's been a very busy afternoon for you, so we really appreciate it.